I can afford to be politically incorrect. I'm not running for anything. So even though we're not on Capitol Hill, we're in metropolitan Washington area, welcome to the world of pretend budgeting and pretend accounting. You saw it yesterday with the budgets being passed. I'm going to give you a sense of the big picture, where we're heading as a country. We're in very unsustainable territory. Don't believe me? Look at the Comptroller General, Gene Dodaro, his report. Even last year, I'm sure I haven't read the current report, is the same. He says if we continue this way, we will not be sustainable as an economic and financial entity. Now, I'm going to start off with a little whiteboard animation that I prepared, and you'll see the meaning of those red lines on the United States of America. With that, this is for the public interest. I know you're talking about the public interest. My foundation produced this, and I'd like you to see it for 2 minutes.
Meet Johnny. Johnny's just a child, but soon he's going to grow up, and he'll want to achieve the American dream for himself and his family. But the way elected officials are spending money in Washington, Johnny's future is uncertain. We all know about the $17 trillion national debt, but what's really alarming is the $55 trillion in additional debt that the federal government has incurred in promised obligations. That's over $520,000 that Johnny owes alone. And Johnny's parents are most likely not aware of the costs of these obligations. That's because, legally, politicians don't need to tell you about them. See, the basic difference lies in the accounting system Washington uses. Under the federal government's cash-basis system of accounting, expenses are recorded at the moment they're paid. Whereas under a better accounting system, the accrual basis, an expense is recognized when a bill is received, even before it's paid. For example, when the government makes promises to senior citizens to pay Social Security, those expenses should be recorded when they're promised, and those promises need to be kept. So what's that mean for Johnny? Well, as a major accounting firm once put it, given the existing practice of cash-basis budgeting and reporting, promises can be made without knowledge of their full cost. This creates an incentive for elected officials to curry favor with today's voters at the expense of tomorrow's taxpayers. This allows politicians to make promises without having to disclose how much they're really going to cost. This means that Johnny's future is being put in jeopardy by politicians who make unsustainable promises just to win votes. But so too is the financial health of our country. If you don't believe us, look at an independent study done by Stanford University in 2011. It ranks the most fiscally sustainable countries in the world. While Australia and New Zealand, which use accrual accounting, are ranked number 1 and number 2, the United States is a dismal number 28. That's just ahead of near-bankrupt Greece. Isn't the problem becoming clearer? The current way the United States government accounts for its bills is making the American future that much more uncertain. It's not a legacy we should leave for Johnny or any of our kids. To learn more, please visit truthandgovernment.org.
All right, well, what we have now is an accounting system which is not telling you the full cost of government. Now, you're accountants, some of you are CPAs, and you understand that if there's anything we should be doing in the public interest, it's telling the citizens and taxpayers what we're spending in Washington. We're not really doing that. And that's one of the problems. That's why you have the articles that I brought. Next slide, please. Okay, this is the big picture. And these are not my numbers. This is the Congressional Budget Office. Look at 2015. That's where we are approximately right now. The national debt on a cash basis is in total about $18.2 billion. You could see where it's going from 2015 to 2025. That's an additional $7 to $8 trillion. So even when you hear that the deficit is coming down, we're adding to the national debt. Politicians would say, isn't it nice The deficit's been reduced annually now from about $1 trillion a couple of years ago to where it is right now, around $500 billion. But that means we added $500 billion to the national debt. But they don't tell you that, or they don't want to remind you. They're just telling you we're reducing the deficit. It's not enough. Next slide. That's the debt bomb that's coming. Here is the fuse on the bomb. It's called interest on the national debt. The 6% is not the interest rate. Thank God interest rates have been below 2% for the public debt that we have outstanding in public hands. But that 6.6% is the amount of the $4 trillion that we're spending approximately this year, in this year's budget. Look where it's going, from 6.6% or 7.1% this year, 2015, to 14.7%. Again, this is coming from the Congressional Budget Office. And what does that mean? Well, their numbers are based on the fact that if nothing changes, this is where we're going. Now, let me tell you why this is dangerous. Next slide. Now, one of the things that people don't understand is that when we're in Congress looking at the budget, we're only talking about that yellow portion. We can't do anything about the blue unless we have entitlement reform. So what is mandatory right now? Medicare, Social Security, and Medicaid, okay? 2.63 trillion, 65% of the $4 trillion we're spending. That's on a cash basis, not the accrual basis. Now, add to it 7%, which is the interest on the debt we're paying out this year. That's the interest as a percentage of the $4 trillion. So what does that leave? 28%. Last year it was 29%. So all you can affect right now through the legislative process and lobbying is 29% of the budget, and guess what? Half that budget is defense. And you know what they want, a stronger defense. And we need more accountability from the Department of Defense. And I don't think we're getting it. But to the extent we increase defense, it's got to come out of, next slide. Okay, this is now the yellow area. Look at this. You've got now Medicare, and let me just see here, there's one point right away. Okay, this is now the 30%. Where is defense in this? Let me see, military. There it is, 16%. Okay? So this is basically the entire 29%, 16% of it is military, and you can see the rest of government. You can go right around the chart and look at that. So look at international affairs. Everybody says we have to cut out international aid. It's only 1%. You can't affect this budget based on that small number. So we need to do some big things, starting with entitlement reforms so we can make that discretionary part bigger. Next. Just in terms of the macro, again, look at the debt that we have this year, 18.2 trillion. These are the numbers from March, the World Bank. Look at the gross domestic product of America, almost as much. So you might say that the government debt on the books, cash basis, is almost as much as the gross domestic product. But if you were to put that on the accrual basis, and we've done that using the numbers that are in the annual statement that comes signed by the Comptroller General and the Secretary of Treasury, they're in the footnotes. When you add up the unrecorded, or how would you say it, the unfunded costs for Social Security, Medicare, and Medicaid, because Medicaid is mandatory, and there's no tax attached to it, so it's got to come out of the budget, you're talking about adding $55 trillion to the 18. Approximately $72 trillion is the new debt, and that's, what, almost 4 times the gross domestic product. This is why even the professionals in Washington are telling you that it is unsustainable to stay on this path. So basically, this is something that my old firm, Arthur Andersen, I spent 22 years in Arthur Andersen. I left as a tax partner. That was 18 years before Enron, okay? And by the way, Enron should never have happened to the firm. It should have been 3 partners in Houston that should have been indicted. 50,000 people lost their jobs. The firm wasn't prepared for the federal government on an indictment, and they lost. They won a year later at the Supreme Court, 9-0, but the firm's reputation was irreparably damaged. But here's what they said in a book that they put out in 1986. Elected officials in Washington are accustomed to the cash basis accounting because it provides them with the advantage of currying favors with today's voters at the expense of tomorrow's taxpayers. So what this boils down to, in my mind, is a word that accountants love. It's called fairness. When you do an audit report for a publicly traded company, and by the way, publicly traded companies are on the accrual basis because the SEC enforces that to protect investors. What are we doing to protect taxpayers and citizens and the future of America? What are we doing to protect Johnny and Mary? So the issue is, are we being fair to the next generation? Are we being fair to the people who do not vote today? So I'll be 75 this year. I have no intention of running for anything, but I will continue my work as a missionary. I don't get paid for what I do. I give speeches around America. I write many articles, as you can see, because I feel morally obliged to be here in front of you today, as I have been in front of other groups like the Association of Government Accountants, Institute of Management Accountants, and now a group that I addressed in Manhattan in 1995, 20 years ago. And the article you have out there that I wrote for your Accounting Horizons started with a paragraph bemoaning the fact that we have $3 trillion in national debt, and now we're up to 18, and we still haven't bent the curve on this. So you have a challenge, not as accountants, as citizens. You are empowered citizens. You understand accounting. You understand fairness. I urge you to jump into the pool with me, and let's change things in Washington. Thank you.